Good morning, everyone. Today, my topic are income from house properties. So already in the last class, just we discussed about how to compute the income from house properties from let out and deemed to be let out. Right now, we are discussed in four portions of the house property, like let out house property, self-occupied house property, deemed to be let out from house property, and the last one partly self-occupied and partly let out. In the last problem, just we have given the owner are let out from 50% and the remaining 25 parts are used for self-occupied and the remaining 25% of the house property used for from his own profession. So regarding now how to compute the house property, it is a very simple. The first one, it is from let out house property. The let out means how much we are given. Here it is given only 50%. Right now, we are calculating the house property value. So how, if you are find the house property value, here follow the three steps. Step one, I consider the municipal rental value or compare with fair rental value, whichever is higher. The highest value is denoted as notional value. It's again compare with of the notional value the following of step 2. It is compare with notional value compare with of standard rent. While comparing of the these two amounts, whichever is lower, the lower amount is denoted as expected rental value. The last step, step 3. These expected rental value are compared with actual rent received from tenant. So while you are compared with of these two amounts, whichever is higher. So it is very easy to compute the house property. The highest value are called as gross rental value and less if in case any municipal taxes are given and these municipal taxes are paid by owner. So we are allowed the taxes are paid by owner. In case the municipal taxes are paid by tenant, we are not allowed because sometimes some of the expenses paid by owner, it is only allowed under the section of the house property and section 21 to 22. So these are compulsory payable or paid by the owner. In case the expenses paid by tenant, these are not allowed while computation of the gross annual value. When you are deduct these municipal taxes, that realize or that amount we call as net annual value. In the case of the net annual value, we are find out how much of the income are taxable income from house property. Now, here already we have calculated the net annual value. In the net annual value, we are allowed as deductions under section 24. The first one, standard deduction under section 24, subsection 1. Here we are allowed the standard deduction at 30% of net annual value. Sir, why we are allowed 30% of net annual value? It is a simple reason. The owner, it means who are provide for rent for or let out purpose. That person are pay some of the expenses like repairs, ground rent, and renovation. Sorry, uh, repairs, municipal taxes, and the ground rent, space, lamps, and electricity. These are liable to pay the owner. So we are allowed a deduction of 30% of net annual value. And the second one, it is one of the important things for calculation of the house property. It is allowed or it is for providing as interest on loan. If the owner are also possible to construct the house property or renovate or repairs on house property, it's allowed as it is possible to take the loan. And it is are also allowed the interest on loan on house property as a deduction. So this is the way of the computation of the house property. It is for let out. In case of the self-occupied property, the self-occupied property, it is the net annual value to become zero. Why? It is also simply say example. We are also stay in our own residence. It is not possible to give the rent from pockets to the bank. So the own money are also possible to contribute, but these amount not as earnings, the personal. Okay. So the in case of the self-occupied property, the net annual value becomes zero. And one more thing, in case sometimes the owner have the two portions, one portion have the self-occupied and another portion to become as his own business or profession. In case of own business or profession or done is property, the net annual value are to become zero. But in these three cases, we are as calculate the net annual value, but only let out house property has given the value and allowed the standard deduction. And first one, they calculate the standard deduction at 30% on net annual value. In case of self-occupied, in the net annual value to becomes zero. So is it allowed as standard deduction? Absolutely, we are not allowed because zero, zero into 30% to become zero. And the interests are known for construction or renovation or repairs on house property. Only the deduction are allowed from in while calculation of income from house property. So this is the way of calculation of the house property. If in case the number of houses are also more, or the number of units are also more of the owner, the way of calculation of following the step one. In here we are considered municipal tax, municipal rental value, and fair rental value, whichever is higher, and the highest value is denoted as notional value. The notional value are compared with standard rate, whichever is lower is expected rate, and the higher lowest value to become as compared with actual rental value, whichever is higher, that value are to become as gross rental value. If you are follow these three steps, it is very easy to compute the house property. Thank you.